Good morning to all traders, and I hope you all had a good weekend. It's been a very interesting one. Last week we had another all-time high for the equities. Today I want to start with the S&P because there is more to talk about on the S&P rather than the US index. But of course we are going to talk about the US index as well. Is the index's day to day. The markets are being hot and cold around trade war. Developments. Now, last Friday's developments or sentiment was positive, as you can probably say for yourself if you just have a look at the S&P 500. So we don't know where this is going to end from a political or let's say, economic perspective as well, because the indexes are also affected by economic data in the US. But for that week, we have the Fed's FOMC minutes released on Wednesday, and of course some housing data from the US. Now, on the other side, we're most likely going to see markets moving based on sentiment from trade wars once again. So I'm going to start with the S&P, as I said before, because it's just way more interesting than the US index, because there is quite a few different scenarios that we can potentially see. Now, I want to really remind you that I'm still supporting the previous idea that was actually change. And I see this as an ending triangle with wave 1, wave 2, wave 3 actually finishing here, then 4 and 5, right? And then we should be looking for prices to really start moving lower. So that assumes that we are now doing wave 3, okay? So we've had the first 3-wave move, second 3-wave move, and this is the third 3-wave move, right? Now, with that being said, we've had wave A, wave B was a triangle, and we're going up for wave C, which looks like it's a nice impulse move to the upside. Now, this is likely to end around the 31.25, and that is because this is the 61.8 extension of waves A and B, okay? So, in case that is broken, we're really looking at fresh highs. We're most likely going to target the 100 Fibonacci extension, which is probably around 3,500s to be honest. Now, I want to go a little bit on the daily to show you something that I've noticed the other day. Now, this is looking like it could also be an expanded triangle, right? With the first wave here, second, third, fourth, and the fifth wave over here. That means a decline from here is not going to stop around that level. It's probably going to move lower towards the 2,000 level, right? And this triangle ending open triangle pattern, and then start moving higher. But of course, since we're on the daily chart, we're looking at these finding the bottom maybe 2020, maybe even 2021, okay? So, and that would be, of course, for a scenario after we've already reversed to the downside, right? Now, the shorter term view, it's a little bit more bearish, to be honest, because we've really reached the 61.8 extension. So even in the short term, we're probably looking at prices to start moving lower, either for a correction or for a reversal. Now, I want to quickly go also on the US index, because it's moving at the moment opposite to the S&P 500. The US index, things are a bit more clear here, okay? So we've got this correction, this ending triangle up here, first wave, second wave, third wave, fourth wave, and we're expecting for wave 5. This will be the end of intermediate wave 1. Now, the case is this: because we've seen this move to the upside, we started moving up. Now, the question is, are we done over here with the upside or not? Well, the possibility of that ending here is good if we start seeing this, if we saw this as a 1, 2, 3 and 4 up here, and then 5, right? Because that means that we've had an A, B, and C expanded triangle over here with wave 4 ending right there, okay? And then we should be looking at prices then to start moving lower. Since we had wave 3 ending at the 200 Fibonacci, then we're looking at 300 Fibonacci around 96.20 for wave 1 to end. Now, the other scenario would be if that is not an expanded flat, which looks like it, we could just consider that as the end of wave 3. Then we're looking at this as being wave A, wave B, and wave C, that is going to take out break-even stops at this level. So probably looking at prices to move towards the 99 and then start moving lower, right? Now, obviously, if that fails, then we're really looking at, say, a potentially new formation, new pattern, something that doesn't really show us anything, at least to me, at the moment, because the signals I'm receiving so far are looking a little bit bearish in the medium term, and in the short term, again, they are a little bit bearish as well. So this is all for the beginning of the week, and happy trading.